Good morning, everyone. Welcome to the last live session of the week. I think we're in for a bit more of an interesting day today compared to what we have seen. It feels like it's been a bit of a scrappy week this week, but going into today, already in the overnight market, we are seeing the S&P 500, the broader US index, is having quite a move. It's pushing out to fresh highs for the year as we speak. So it's above 2,900. We'll take a look at that in a bit more depth. The euro is having a bit of a move as well. That's risen about 30 odd points, 25 points in the last couple of hours, which is a big move for the euro at the moment. But let's just put the risk warning up and then we'll get started. So as usual, we do this 3 times a week: Monday, Wednesday, Friday at 10 o'clock. I'm away Monday to Wednesday next week, so this will be the last live one till next Friday, because I won't be able to do them on Monday and Wednesday. So maybe we'll have a bit more of a relaxed look today at some bigger levels to keep an eye on in the days ahead. But it feels like it's been a bit up, down this week. But today, going into today's session, we are seeing some movers. So we'll have a look at that in a bit more detail. Just a quick plug, as it's the last one of the week. We're doing this promotion for new clients. If you open an account, go to Capital.com/David, open a real money trading account, put some cash in, a few hundred quid. Once complete, we'll be in touch to arrange a convenient time to do a 30-minute Skype session. So one-on-one trading with me, talking about trading strategies, risk management, markets to watch, all that sort of thing. Okay, so that's Capital.com, David, and the link is in the chat on the right-hand side. Okay, let's get into it. Let's just drag the platform over. Here we go. Okay, let's start with stock markets, because that is quite the move. I'm assuming the Dow's moving as well. Yeah, the Dow has moved. So since 9 o'clock, it's moved about 120 points. So in the last hour, we are seeing the move. I must admit, I haven't checked to see what's causing that move. I don't really care, to be honest, but it does look like a bullish start to the day. Let's talk about the S&P first, because I have, regular attendees to this now. I'm a big fan of trading the S&P, and I did put a trade on yesterday, which was looking a little bit wobbly for a while, but this has definitely helped it today. But let's just remind ourselves where we are. So this is the broader US stock market index. So we have been in, what's that doing? We've been in this incredible recovery since Christmas Eve. So with this really bearish last quarter of last year, big sell-off into December. And since then, we've seen this V-shaped recovery, and it's continuing. So this is where we are now. So just pushing through the 2,900 level. You can see what something of a non-event it's been for the week. We've been sort of down, and up today. So it's just been flip-flopping around all this week, although there have been opportunities, and we'll look at that in a second. So pushing above 2,900, it still looks like, I think, as incredible as it would have been to think it in December, that we're going to see these markets gunning for the all-time highs, the old all-time highs from September last year. So about 29.45 on the S&P, something like that. We'll have a look at the Dow, the Nasdaq, the FTSE and the DAX in a minute. But clearly these markets are still strong. But let me show you the trades, really, the trade from yesterday. If I flip this over to maybe a 5-minute chart, let's have a look. Where was it? It was here somewhere. I think what was interesting, what's been interesting the last couple of days, we've seen the market. So what's the date today? Hang on a second. The 12th. So on Wednesday, we did see the market push higher and then sell off. And then on Thursday, we saw a similar thing. We saw the market push higher. But then yesterday, it started weakening. But what I thought was interesting, again, we saw quite a sharp sell-off from sort of 4 o'clock yesterday. So that the S&P went from about 28.92 down to 28.82. So 10 big points. But what was interesting, I think, was this move here. So we did see it spike down into these lows at 28.82 at about 4:30. And then I actually ended up buying here, but the better trade, if you were patient, was to wait till about 7:30 UK time, where it came down to retest the low from earlier in the session. So it's a market that clearly was still positive, because we've seen it push to sort of fresh highs this week, even though it hasn't made much progress. And, you know, if we were buying in here, I bought at 86, 28.86. But if we were buying in here, you know, 28.85-ish, there were a couple of obvious places, I think, for a stop loss. We could have had it underneath the low from earlier in the session. So that'd be quite an aggressive stop. Or the better stop would have been, so this is April 11th, we could have had it the other side of Wednesday's low. So just beyond 28.80. So however you look at it, I think it was a good trade in terms of risk versus reward. And I thought that we did a video last week that's on our channel talking about exactly this approach, the latest bit of our forex trading course. So for a bit more detail on that, just have a look at the other video on the channel. So that was the trade. So I ended up buying here. The market pushed a bit higher, sold off. I thought, I'm going to get stopped out here because my stop was below the low. Held, and then today, bang, we've seen that. You know, so I'm very happy. So I've trailed my stop up, and we'll see what happens today. So I think it could make for an interesting session. I mean, clearly we've still got more than 4 hours until the US markets officially open at 2:30 UK time. But you know, if we're staying up here, we are opening at fresh highs for 2019. So again, I think the opportunity today could be, if we see anything like a sell-off today, you know, and if we see a deeper sell-off, for me, if I was a buyer today, I'd be looking to have a stop loss below yesterday's low, so below 28.82. So maybe we'll have a bit of fun and games in the US session this afternoon. Let's see what happens. Is that going to go down? Someone's asking. Who knows? But we'll see. I mean, it's quite a sharp move. Clearly, some data's come out. We've seen quite a sharp move off that. So maybe it is a bit overcooked. Maybe we do see a bit of a retracement going into the official US session. But I think it could make for an interesting afternoon. But clearly, you know, the story for stock markets is still the same. There are still buyers on dips. You know, I think it's incredibly difficult to try and make money shorting this market when very clearly, you know, the line of least resistance is still up. You know, just look at the move out since the third week of March. You know, it's gone from 27.85 to 29.01. It's a 115-point move in 2 or 3 weeks. You know, so clearly the least painful side of the market has been to be a buyer, you know, and just try and ride this move for as long as you can, rather than trying to catch the fiddly little sell-offs, you know. And for me, that continues. You know, that continues going into next week. If we do close at fresh highs for 2019 today, that looks like a really bullish finish for the week. So, oh, I should say, if you want any markets looking at, see, someone's just put Disney in. We'll take a look at that later. But if you want any markets looking at, just put them in the chat. So, yeah, very positive. Let's take a look at the Dow, the Nasdaq, and then the European markets. Interesting that the Dow is not on all-time highs, 2019 highs. So we're still a bit below that. But let's take a look on the dailies for the Dow. Here we go, just to take a look at some levels. So pretty similar, not quite as the same sort of momentum that the S&P has had. So we saw highs for the Dow around about 26,500 from the 5th of April. So we're currently trading about 200 points below that. But again, looking positive going into this afternoon. You know, if we look at some of the levels to watch, here we go. So what have we got then? So we've got the lows from yesterday. It did actually sort of trickle below the lows for the week yesterday, the Dow. So the Dow did push below the previous lows, then a sharp turnaround today. So again, I think for the Dow going into today, you know, we've got lows of support now from yesterday's low, 26,050 through to 26,100. You know, so if we got 150 point sell-off for the Dow from where it's trading now into today's open, it could be interesting, I think, but still positive. Let's have a quick look at the Nasdaq, then we'll do the European markets, then we'll get into oil, gold, and FX. So here's the Nasdaq. So actually, the Nasdaq as well clearly has moved, but again, we are still below the highs for the year, which were only set yesterday in the overnight session yesterday. Let's flip this over to a daily. Here we go. So the obvious next target for the Nasdaq these old highs. So this is the Nasdaq 100, the highs, the late August, and then October highs, just above 7,700. That sort of level. So we're in spitting distance now. We're what, 70, 80 points away from that sort of area. So again, I think it's going to be interesting. It's really interesting going into next week. I think particularly if we start to break through these highs, you'd expect another surge of momentum in these markets. So let's see what happens. But levels to watch in the Nasdaq this afternoon, same sort of stuff. I think yesterday's low about 75, 78. So we're currently 50 points above that. So if we see the Nasdaq under a bit of pressure this afternoon, just watch how it performs next to yesterday's low. But again, a clear recovery there. Lots of support left, a bit lower. So all positive for US markets ahead of the open. So they're pushing to fresh highs 2019. Let's see what happens if they weaken. Let's take a quick look at the European markets. See what's going on here. Let's flip this over to a daily. So this is the DAX. So here's the DAX. I went short the DAX this week and I lost on that because it didn't really break much further. But the DAX is trading just below the highs for the year so far. Highs for the year were set last week around about 12,040, 12,050, that sort of area. So we're about 60 points below that at the moment. So let's just take a look at some of the short-term levels. Here we go. So I ended up going short here, and it moved a bit lower, but got stopped out in the end yesterday. So it's been a bit of a scrappy week for the DAX, but we've got clearly support 11,850 from the 9th of April. Tested it again yesterday, and we have seen the market move higher. Maybe a bit of a problem up here, 12,050, those highs for the year. So clearly it's still positive, because the recovery continues, but maybe not quite as positive as the S&P. So I suppose one way of looking at this, maybe we are seeing this move in the pre-market trade getting a bit overdone. So maybe that move higher on the S&P, it is coming off a bit now. Maybe it is a bit overdone, but let's see what happens this afternoon. So hopefully we'll have a bit more volatility this afternoon. So there's the DAX and the FTSE. Obviously, I've not talked much about the indicators on this, but clearly with the strength we're seeing, all these markets are looking overbought. Let's take a look at the FTSE. If we flip it over to a daily, there's the FTSE. The FTSE's been overbought since all the way through April, really. But again, it does illustrate, I think, that the risk of relying too much on these sort of things when a market is so strong. The FTSE went overbought here when it was at 73, 72, and it pushed another 100 points higher so far. So I think that the trend and the momentum in the market is much more important when we have strongly moving markets like we've had all year in stocks. So we're looking at this recovery from the December lows. That's still going. Let's flip it over to an hourly, look at some short-term levels. Here we go. So lots of support on this FTSE chart from April the 2nd, 73.70, April the 4th, 73.75, yesterday 73.90. So any weakness below 7,400 has looked like a buying opportunity. So I wouldn't want to buy them now from a short-term point of view. But like I say, if we see maybe a bit of pessimism creep in this afternoon, maybe there'll be an opportunity there. Let's see what happens. So stock markets are starting Friday in a very positive mood. So it'll be interesting to see where it closes. Let's take a look at oil and gold next. I think oil's been interesting because let's flip it over to the dailies. So we've seen this massive move in the oil price in the last 4 months. So the price of oil has gone up 50%. So from $42.50 a barrel to what was the high earlier this week? 64.70-ish. Clearly, still plenty of momentum behind this market. Not surprising. RSI massively overbought and has been for the best part of 2 weeks now. But the market's still going up. So on oil, I would suggest that when we've got momentum like this, still looking for buying opportunities, really. So let's flip it over to the short-term chart. Quite a bit of volatility this week. You know, it had this decisive move higher towards the end of last week through 63. You know, it broke $60 a barrel was a problem for a while, and then we saw this decisive move end of March through 60, and then last week through 63, and we have seen it sort of try and nudge its way a bit higher this week. We haven't really seen the follow through though, but you can see, you know, even it sold off pretty heavily from Wednesday evening into yesterday. So going from 64.70 down to what, 63.30, so 150 points, so $1.50. But it's snapped back again, and I think this has been the story for oil, you know, all this year. I think is not to get sucked in to weakness, because it's the buyers come piling back in and just whip this market around really quickly. So for me, nothing has changed, you know. So for me, I'd still want to be a buyer of dips on oil. So it's touched $64.50 a barrel this morning, but I think we've got lots of support left at 63, first of all, from earlier this week. Then we've got yesterday's lows at 63.30. So I think, you know, I think it's only if we see it go back below a major support, but again, it's pretty short term, like $62 a barrel, do we have the risk of a much deeper sell-off. But again, I think with oil, it shows you the importance of trying to put the trend on your side, you know, because even if you have a sloppy entry point, you know, I think that the trend was quite forgiving, you know, because the trend has been so strong. You know, even if your timing is a bit off, you've been saved by the trend in stock markets and oil. So for me, a bit choppy last couple of days, but still looking to buy any sort of major sell-offs. The next hurdle looks like maybe 68. I think we looked at this early in the week from the late October levels, late October highs up about 68. So, you know, I think we could still squeeze a little bit higher from here. So not really worried about a major sell-off yet. Famous last words in oil. Gold has been, I think, frustrating. Maybe is the right word. It looks like it's sort of trying to build a recovery, and then it just gets, you know, slammed back. I've mentioned a few times. I've got a medium-term positioning in gold. I'm just really simple approach, just buying in since October, and just adding every month as the market moves higher with fairly wide stop losses. You know, so that's clearly in profit. But I've given back a chunk of profit in the last 6 weeks or so because we've seen the market drop back about $40, $50. But for me, the big trend is still intact. So this big trend is still intact. I recorded a slightly more in-depth video on gold. It should go up next week on our channel. But the lows for the year for me are still the big ones to watch on gold. So that's why I'm not too worried whenever we see a sell-off, because so far it's holding above those lows for the year. So the lows for January for gold are around about 12.75, something like that. Just banging around. Came back to it in March, holds, came back to it just last week, traded down to 12.81, held, got knocked yesterday down to 12.89, and it's held. So for me, you know, if I was a buyer of gold now, I would want my stop loss the other side of the lows for the year. I think if we do see those lows broken, things look a bit different. Things look a bit more precarious, let's say. But I think for now, still looking for a run back up to these old highs at 13.45. If we break there, you know, longer term target, last year high is about 13.65, and this is a real problem area. 13.65 to 13.80 is a real problem area for the price of gold. So it's been a bit dull, I think it's fair to say, the last 6 weeks or so, which has been chop, chop, chop. But for me, that trend is still going, and that's it. So we'll see. Let's have a quick look at the short-term levels. Then we'll take a look at the dollar index. So here's the hourly chart on gold. And you can just see just how effective. There we go. Since January this year, this 12.75, 12.80 range has been. Okay, so let's see. I thought the move earlier in the week through 1300 was positive, and we did trade as high as 13.10. I'm guessing it's dollar strength that's brought it back. We'll take a look at it in a minute. So for me, I still think we're going to crawl back up let's see where we are next week. While we're on the subject of gold, let's take a quick look at the dollar index. So DXY on our platform. So it's that, because I think this is the reason, or maybe not actually. Maybe I'm talking rubbish. This doesn't look to be the reason that gold's been hit so hard. So this is the dollar against a basket of different currencies, and I think it's interesting because it had been pushing back up to the highs for last year. So we had been seeing since Feb dollar strength, and that had been putting the pressure a little bit on the gold price. And I was wondering, are we going to see a move through sort of 97, 70, 98? But it's interesting, it's backed off. So I'm guessing maybe that surge yesterday was a reason, put some pressure on the gold price. But it's interesting, it's backing away again from these old highs. So let's see. Anyway, let's see what happens. And then finally, the euro has woken up. So we'll look at the euro last today. Let's look at the pound first of all. So the latest on Brexit, of course, I'm sure we're all aware. We've got an extension till Halloween, which is incredibly appropriate, of course. But maybe we'll leave before that, so we don't have to contend the European elections. I think the pound doesn't care. I think the pound has given up hope. I think pound US dollar of anything ever getting decided, and it's just trading in this tightening range. Actually, I suppose if you're a fan of patterns, you could say that was a triangle, couldn't you? And we're waiting for the triangle to break out on pound US dollar, but you can just see just the range drying up as everyone gets more and more fed up of what isn't happening. So which we're trading pretty much where we were. Actually, pretty much where we were beginning of Feb. If you look on the hourlies, I just wouldn't trade at the moment, I don't think. Looking on the hourlies, you know, what we've been saying for, it feels like a long time now, and it is. I suppose it's nearly 2 months. 129.50 to 130 is a real buying opportunity. Well, it has been a buying opportunity. You know, we see the buyers step in on these levels, and then it can't get much above 133. You know, so if it sort of spikes lower, like it did a week ago, what was that on? Maybe the payrolls. It was the afternoon of the payrolls, wasn't it? So if it spikes down to 130 and you really want to trade it, then it looks like a buying opportunity. But then look at this week. Look at the lack of volatility. What have we had this week? 131.20. Not even 100-point range this week on pound US dollar. So yeah, pretty rubbish. Pretty rubbish. And I think the problem is, as I've said before, I think the problem is when it does move, it moves so quick on some political whisper that you're either in the trade or you're not. You know. So there you go. Euro though, euro much more interesting. So euro US dollar. So like I said, I did buy this. I checked today before I came on. Last Wednesday, I bought this. So a week, 10 days ago, nearly at 112.27 was the level. So it was down here somewhere. So I've sat there on profit, and then yesterday, or a couple of days ago, basically gave back all my profit, and today it's finally getting a move on. So why I think it's interesting, euro US dollar, just to recap the bigger picture, the daily chart. So since 2018 it has been sliding. You know, 2018 Feb, a euro was worth $1.26, and it lost more than 10% ish. And then we saw it move to a low in March this year, below the lows for last year, which was set in November. So we saw the euro against the dollar hit I think it was a 20-month low. But as we are seeing in recent months for the euro, breaks these big levels and we don't get any follow through. You know, it's not as if it starts falling off a cliff. There's loads more sellers, so we end up with lots of false breaks on euro dollar. Rallied into March, and this is the reason for buying. So the market, it came back to it. It came back early April and holds above the old low. So again, if you were bullish on the euro, it's an obvious place to have your stop loss, because if we start pushing through the old lows, then clearly your timing is off at the very best. So, and we have seen it recover. And if you look on the hourly chart as well, you can see that was the rally on the latest US interest rate decision up to 114.50. Been in decline since then. There's that move towards the old low, and then we've seen it break out and establish this new trend. And this is where we are. So my reason, I'm still in the trade. I think I'll start moving my stop later on today if we see a bit more strength. But there's our trend. It looks, and it was actually pretty good. If you drew the trend line there with the move down April the 10th, a couple of days ago, and the move down last night to that trend. So that's where we are. So for now, I wouldn't want to be a buyer now. But if we get a sell-off next week, down towards the mid 112s again, it looks like an opportunity. We've got support at 112.30, 112. So it'd be interesting to see what happens with this little euro trend chugging away. But it looks like it's finally getting a move on. So let's see where that ends the week. So that's euro US dollar. So that's pretty interesting. So markets to watch. I think stock markets this afternoon, because the S&P has set fresh highs for the year in pre-market trading. Let's see. I hope that makes for maybe a bit more of a volatile afternoon this afternoon. So that would be my focus if you're watching it, or if you get home from work at 7 o'clock and you want to watch a market. I think I've watched US markets for the last couple of hours a day and see how they are doing. The euro, this one is interesting. Maybe not up here, but going into next week, if we see it under a bit of pressure next week, it'll be interesting to see if this trend can recover. Pound looks just dull as dishwater at the moment, and gold looking for another move through 1300. Let's see what happens. I'll jump into the questions now. Someone's asked for dollar yen. The first question, it's a big move, wasn't there, in dollar yen? Let's have a look. So dollar yen. There we go. So let's bring that one up. So what we're seeing here, this is dollar strength, or probably more likely yen weakness, I think. So if we sort of try and zoom in and take that spike, that sell-off in Jan out of the picture. So this is where we are in dollar yen. So it looks strong. I personally would be tempted to be looking for a place to go short. Not yet. Let's wait for a bit of weakness to come in first. But if we look at, I'm a big fan of price action rather than indicators. We look at what happened 1st of March, traded up to just above 112. 5th of March, same sort of thing. 15th of March, 111.90. So the 112s have been a big problem for dollar yen. So let's see what happens. So still strong running into this, but I think maybe an interesting market to watch next week. There we go. So that's it on the hourly chart. Look on the hourly. Look how overbought it's gone on the hourly. Again, not surprising after the run we've seen. So I would be looking to see if we see some weakness come back in up here. It's only been in the current hour. It's actually turned around. But maybe one to watch going into next week if you're a fan of trading dollar yen, to see how it performs around this 112 level. But maybe the risk is the dollar is going to run out of steam. And the flip side, of course, if we break 112 properly, it looks like we're going to pull back into the old range from the last 3 months of last year. But initially looking for it to run out of steam at 112. Do you think Tesla is going to recover or tank again? We did a video 2 days ago. Hang on a second, let me find it. Just because Tesla's been in the news and blah blah blah. We did this video, and it's I think it's been one of our one of our best performing videos. If you go to our channel, it's this one here. After Tesla stock crash 2019, buy or sell. So I look at it in a bit more depth in there. But if we have a look at it on here, I think if you're trading it, it's arguably a buy down here, Tesla, if you want to trade it, because it's been pretty flat for 2 years now, the Tesla share price. So Feb 2017, it was about $270 a share. It's run up to sort of 380, just shy of 400 a few times. And then every time it gets banged down towards 250, the buyers come back in. So as of yesterday, it closed at 268. So I think if you were taking a trading position in Tesla, it does look like a buy down here. And I think we talked about it earlier in the week, didn't we? About where to put stop losses. So I think an aggressive stop is the low here, April the 4th lows. Let's just zoom in. maybe a slightly better stop is the low from March, and then the wider stop would be the other side. I think of these lows from a year ago. Yeah, so I think Tesla is interesting down here. I mean, you could argue there's no urgency to go piling in, because our little trend from those highs is still chugging away. So I think it depends on how cautious you are, really. But if I had to do something, I think I'd rather be a buyer rather than a seller, because the risk reward stacks up. What would be interesting, I think, is if it starts losing the 240 level. If that were to happen, I think then maybe even some of the Tesla faithful might start losing faith there. But for now, 240 has been a real flaw in Tesla. Sterling yen again. There's our regular request for sterling yen. Let's have a look at that. See what that's done actually in the light of that dollar yen strength. What's happened here? Let's bring it up. It's been a bit of a run, haven't we? There we go. So we have had, we have seen these lows. We should just start trading this now, because we look at it every time now. So let's say we've got 143.75 has been a good short-term support, hasn't it? The market drifted off to below 145 briefly, pushed back up. It's a pretty tight range, isn't it? And I would just be looking at previous levels, like up here, just above 147, bigger level ahead of 149. Let's take a look on the hourlies. There we go. So we do have our little trend chugging away, don't we? Little trend over the last 3 days or so. So for me, going into next week, if we saw it sell off and we're looking to follow this trend, be looking at the mid 145s. But I think the break through the April the 9th high is positive. I mean, it's not that exciting over the last few weeks, but I suppose if you're following this little trend, there is a little trend in there, isn't there? Evraz, someone's asked for that's a UK stock, isn't it? Evraz PLC, or is it? Oh, we don't cover that yet. I'll tell you what I'll do. I will bring it up on another platform as it's Friday. Hang on a second. Let's just bring up Evraz and drag that across. Sorry, I can't spell it. Evraz. What do? They're some sort of energy company, or have I got that completely wrong? Industrial metals and mining. Okay. Let's drag them across. Here we go. So I've got no idea what all those lines were I've drawn in the past. That is really positive, isn't it? It's interesting, that, isn't it? Great trend. So bigger picture view. Great trend since June 2017. Big sideways move, false breaks down here, and then bang, the breakout through 584. I would say from an investing point of view, that trend is clearly up, isn't it? Lots of support left from sort of 570 through to sort of 600. But it's interesting, I think, that break recently. So it's we can't look at the short term on this, but from a daily point of view, that's a pretty major break, I think, from the 7th of March this year. So that does look positive. Famous last words. Clearly nothing today is financial advice, but can you use some of your gains to fix your squeaky door? I bought a new chair, actually, so it's not like it used to be my chair that squawked. But yeah, I think there is a dodgy door in here somewhere. Thanks for that, Adam. Glad you're enjoying it. Tilray, someone's asking for Tilray. Tilray Inc. There we go. Oh, it doesn't look good, does it? Or on an hourly chart, it doesn't look good. Let's have a quick look. Let's have a look on the dailies. What do you reckon? Which way is the trend on Tilray? So it looks like they only just came to the market, or maybe we haven't got that much data. Oh. So they only came to the market in July 2018. And we've got data going back to December last year. Looking on another screen, when they first debuted, they were sort of bubbling around $20. I mean, that's a heck of a move, isn't it? What do they do? They're not some sort of marijuana stock, are they? It says pharmaceuticals and biotechs. Anyway, it still looks weak, doesn't it? So if for whatever reason I wanted to be a buyer, oh, I missed CMG. I'll look at that in a minute. If I wanted to be, I would be waiting, because clearly that trend is down until a big move yesterday. So it just looks really weak, doesn't it? I mean, just really weak. Particularly, of course, when you consider, because this is a US stock, when you consider what US markets have done this year, just gone up, what feels like every day nearly. this is really going against that broader market trend. So it still looks a really weak finish yesterday. You watch it, it'll open at like $70 today or something, but really weak. I think the trend is still down. So CMG. UK, is it UK stock? I can't remember. CMG. Oh, why don't we cover that? Hang on a second. Okay, let me bring up the other one. Hold on. Oh, is it Chipotle? How do you say it? Chipotle, whatever it is. That one. Great trend. Look at that. So let's go. I do see this one talked about a lot on Twitter. Actually, I don't think I've ever actually looked at it. My God, I mean, that really has got a move on. Actually, I think that there's a couple of interesting things in here. First of all, I think, again, the danger of using RSI. So this thing has been overbought since January, right? Since it was trading at $490. It's now above $700. So we've seen, what's that, a 40% move since it went overbought. That is a heck of a move this year, isn't it? So again, it shows the danger, I think, of relying too much on RSIs, you know, because it can keep you out of good. And it did that for me for years. I wouldn't buy stuff if the RSI was overbought, and you can keep you out of some great opportunities. Anyway, so this one, let's just go back to the history. So we had this. There we go. So we had the old highs from August, in bit of pressure into the end of the year, break this year, gap higher in Feb, and then it's just gone like a rocket, hasn't it? I mean, it's, you know, from a trading point of view, an investing point of view, you want to be a buyer. The only question, and it's a big question, you know, when a market's doing this, where does your stop go? That's the thing I always think about. I want to try and jump on the trend, but where does my stop go? And I think for me, let's have a look, because we have seen a bit of weakness yesterday. It did actually go down yesterday. Let's take a look. If we were watching it this afternoon, I think on an hourly chart, for me, probably the closest I want my stop is below these late March lows at 690-ish, something like that. You know, but loads of support. If we got a bigger sell-off, it'd be interesting. But absolute fantastic one there. You know, right from that breakout, and it hardly looked back. So the breakout was what, $600, and even then, in the last couple of months, it's moved $100, 15%. So yeah, cracking one. What else? Someone saying gold is pushing up hard as we speak. Is it? Let's have a quick look. Let's have a quick look at gold. 1294. Oh, it's having a bit of a move, isn't it? A bit of a move in there since we started today. A few dollars. Disney, someone's asked for. So let's have a look at Disney. Was there some hookup with Apple or something at the moment? Let's take a look at Disney. Look on the daily charts. It's interesting that all these US stocks are coming up. I do think, you know, although we don't talk about individual stocks, I don't on these things, I think there are some real interesting opportunities if you don't want to sit there and watch the screen for hours every day, which is perfectly sensible. I think if you look at US stocks and look on daily charts, you know, I think there are still medium-term sort of swing trading opportunities. Trading doesn't have to be about jumping in and out of the S&P 5 times a week. You know, you could, you know, like that Chipotle, whatever they are. You know, if you'd have bought that on the break, famous last words, it's been a great trade. But I think there are, you know, because we have seen so much strength in markets in the US, and still do, there are still some interesting opportunities out there. Disney on this chart, it just looks a bit boring, doesn't it? What do you think? I mean, there's an argument for selling short, you know, up here. I think because we're pushing back to a level since August last year, 118 to 120. Big problem. You know, the shares cannot get through it. They broke out, but didn't actually get any momentum. We've seen this run over the last couple of weeks, and just, you know, Wednesday and Thursday, we're seeing it turn around. So arguably the aggressive trades here, be a seller on the open, wherever that is, 116.60, with a stop above let's say you have a stop at 121. So you've got $5 stop. If let's say it ran back to those old lows at 100, you've got $5 risk and $16 upside. So, and it's, for those of you who believe in the squiggles, it is overbought on the squiggle, on the RSI down here. So, you know, in terms of risk reward, it's an interesting trade if you thought that Disney share price had been overstretched, because you've got, you know, relatively low level of risk. Not actually, it's not even five. Let's say you did put a $5 stop on it, and if we go back to those old lows, maybe we won't get that far. But I think that for me, the risk reward would favour being short. Let's see what happens. Let's see how wrong I am over the next week. Aurora. That is a cannabis stock, isn't it? I think Aurora. I must admit, I've never looked at this, but Aurora Cannabis. There we go. I mean, they are incredibly volatile, aren't they? You can just see from back here, back in 2017, when all this stuff started getting listed, going from $3 in November 2017 to $15 by January 2018. They feel a bit like AIM stocks, you know, the UK small cap stocks that go just absolutely ballistic and then just fall off a cliff. I don't know. You could argue that recovery was still intact. I think $11 has been a bit of a floor for it. I'd worry that we're near to, you know, $15. These old highs that have been in place for a year. So arguably that trend is still up, but I don't know how much upside there is left from here. So there we go. Disney pre-market over 120. Oh, thank you. Thanks for that. Okay. So Disney, I wonder if that, okay, let's jump back on Disney. So I wonder if that, I would definitely short it then. That's interesting then. So that must be, let me just have a quick Google. Are they done a tie-up with Apple on some stuff? So a quick look. So they're trading at 120 pre-market. Disney Plus is likely coming to Apple TV. Okay, so this is the Disney CEO says Disney Plus likely coming to Apple TV, blah, 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 blah. Okay, so if that is the reason, I think they got this Disney Plus app coming. Okay, so that is the reason. It'd be an interesting one to watch today. So it's popped about what, $3, so about what, 2 or 3% on this Apple thing. It's whether you think the market is overdoing it. So it'd be a really interesting one to watch when that starts trading at 2:30 today. So if someone can remind me in a week's time when we do this again, let's see what happened with Disney. But I'd be tempted to think that maybe it's a bit overdone. Let's see though. Let's see what happens. Tron. Let me just make sure I've covered all of them. Is Tron a thingy? Is it a cryptocurrency? Tron, there we go. Tron to US dollar. Let's have a quick look at Bitcoin actually to finish things off. I've said before, I'm not a fan of cryptos. So we get these bursts of volatility, don't we? Then nothing. It looks a bit boring to me. I think there are arguments why we might see Bitcoin recover this year further. Tron at the moment, we still looks a little bit sideways and a little bit trapped by 0.034888, the old highs. You know, we had that run on the Bitcoin strength by the looks of it, but it just looks a little bit boring, I think, still for me. I think if we can sort of recover through there, it starts to look a bit more interesting. I suppose, you know, we have seen all this year 0.02 be a floor for Tron. So if we saw it push a bit lower next week, if you really wanted to buy it, then maybe it looks a bit interesting. But for me, it still looks a little bit too sideways. But let's wrap things up by looking at, of course, the crypto to end all cryptos, Bitcoin. It's been dull. It's not surprising, this is it? We had that sharp move last week on Bitcoin, 20% move. It has pushed a little bit higher, but it's drifted the last couple of days. But I think this is interesting though, because it has broken these old resistances at 4.4. We do have this recovery going on since December. I think if we can see a bit more weakness next week, it looks really interesting to see, well, right, where do the buyers come back in? And you'd be expecting them to come back in ahead of 4,000. So I think if we do see a bit more weakness next week, I could even be tempted to be a buyer of Bitcoin. Let's see what happens. But if it drifts off after that surge, but I do think this surge does feel a little bit different because it's managed to actually break a reasonable barrier for Bitcoin, these sort of 3-4 month highs. So we'll come back to it. Right, that's it. So we're going to wrap things up there. So quite a long one today. So like I say, I'm away Monday to Wednesday next week, so we won't be doing this again till next Friday. To never miss out, if you can just click on the subscribe button down there, we get a push whenever we go loads. Thanks for that. Whenever we go live, if you can click on the like thing, the thumbs up thing, if you like it, because it helps our YouTube algorithms, apparently. I don't know what I'm talking about. And then we'll do it all again next, whenever, Friday, isn't it, Friday? But I think it could be an interesting afternoon for stock markets. And yeah, worth keeping an eye on Disney to see how it performs, if it is going to gap open that high. But thanks very much, and hopefully see you next Friday.